around 5. I welcome all the participants to this session on deep diving into the financial derivatives. We have our head of the department, Dr. Sanjeev Malviya, Dean officiating with us. Dr. Malviya has more than 26 years of experience in industry as well as in academia. He has worked as regional head and he was responsible for management of profit centers and expansion of business, brand management, channel sales management, training and development. Dr. Malviya has been appointed as VCC member of IMA, the apex body for management in India. He is the nominated member for CII and he is the convener of the National Education Policy 2020 Implementation Committee from ICFAI University, Dehradun. Dr. Malviya, I invite you for your words of wisdom, sir.
Thank you, Dr. Saurabh. It's a pleasure to welcome Dr. Anup Raj. He is the authority in this area, and we have been conducting these thought leader sessions, inviting people, eminent people from the industry, from the academics, and Dr. Anup Raj is a combination of both academic world and the industry world. It's a pleasure to have him in this session. And just to share with Dr. Anup, ICFAI University, Dehradun, of which this ICFAI Business School is a part of, we are amongst the top 50 universities globally, ranked by the World University with Real Impact rankings in the industry initiatives. And we are also amongst the top 50 universities ranked by the Time Higher Education Impact Ranking for 2021. And amongst the only university in Uttarakhand to achieve this. For all of us, we have been looking forward to this session on financial derivative, to the students, to the colleagues who are there. We have been looking at financial derivatives as options, warrants, forward contracts, etc., futures, currencies, and basically all these financial instruments. Future and options, these are the tools which most of us are familiar with who are trading in the stock market. And as financial contracts between the buyers and sellers of the asset, the futures and options provide you opportunity for huge profits, although the risks are also there. But before choosing any of the financial derivatives for investment, very important. It is very important to understand them, know what are the differences between these various instruments, and how do we pick up something which is suiting our financial needs. I think this session is going to help us understand what is various financial instruments in terms of these derivatives which can be used to get the benefits and to meet our financial goals, whatever we have set for ourselves. It cannot be better than Dr. Anup Raj from GrabGuidance, who deals with these things day in and day out, has decades of experience and is an authority in the area. He has the knowledge that may help to bring huge gains to all of us who are listening to him and are able to understand and follow his advice. Thank you, Dr. Raj, for taking out time and interacting with all of us. Thanks to Dr. Saurabh also for this wonderful initiative which he has taken. Over to you, Dr. Raj.
Thank you, sir. Thank you, sir. Sir, I would like to welcome Dr. Anup Raj from GrabGuidance with the team of Dr. Himanshu Puri, who is co-founder and CEO of LegitQuest and GrabGuidance. He has also worked as content strategist with Upgrad, and he had wide teaching experience also with MIT, with IILM, along with his another team member, Mr. Mohit, who is founding team member of GrabGuidance, who is looking after marketing and sales teams. Now, Dr. Anup Raj, who is a PhD in financial derivatives, having 17 years of rich experience in financial market. He had worked in various domains of financial aspects like derivative trading and research, portfolio management, arbitrage trading models, directional derivative trading, technical and quantitative and algorithmic trading strategies. He had worked for building analytics algorithms and automated trading, automated market analytics. He had worked for research and execution of quantitative models, technical models, and fundamental models. He has investment experience across global markets and assets. And in academics, he had worked with IIM. He had worked as a visiting professor at various schools like MIT Business School, Fortune Institute of Business, IBS, Gurgaon, ICFAI, and Galgotia University. I welcome you, sir.
Thank you very much. So I really feel very honored, and I express my heartfelt gratitude to all of you, the institution, ICFAI, and its pillars like the dean, the director, the professors, and especially my darling spirited students and enterprising soul, Himanshu Puri, Mohit for his dynamic contribution to the marketing, coordination, everything. So let's begin. So I think nowadays the financial derivative, especially the whole financial market, it has become a buzz among everyone. And I think pandemic has set a very smooth field to do a marketing pitch for this different type of financial instruments. However, since very beginning, there are people who have been claiming and who have been praising also simultaneously that I have earned money. If you have said that I have lost money and all. But to be very honest, I'm telling you, this is a very, very open battlefield, and it is one of the toughest battlefield what I have experienced over the 17 to 18 years of my careers. But first of all, I wish to thank just from the core of my heart to students, because still I can I remember that in 2008, when I was delivering a small lecture at the MIT University, one of the students asked a very tough question to me. So his question was that, sir, all the faculties, all the academicians, they come here and your people just keep us motivating us to do something. But I find this lack of spirit among the faculty. Why do they not create something? So my dear darling student, still I'm thankful to all those students who just haunted me to do something and they haunted me to take this initiative. So then this journey began. However, the journey has started in 2004 itself as a research scholar, but it was not as much on the war path. But since 2008, I started this journey on the war path. So it was a matter of just to make oneself or to mar oneself. So now in 2012, I started my own venture in an association with one of my clients. He is NRI. So we set up that one institution also, IITA, and gradually we set up a small proprietary hedge fund. So we started before 2010, it was not known to me how quants and other things works, because in India, it was a totally manual trading. So from 2004 to 2008, I handled lots of arbitrageurs and all. So we were doing some sort of a strategy, but it could not have been automated. But thanks to the technology also, because every day the innovation and transformation in the technology, it has made our job very easy. And I'm very happy to share that now there are many people who have made it as a livelihood, and they have been very successful, right? And especially I'm very much thankful to this industry that since 2004 itself, it has been my livelihood also. So there are many places there has been a differences on opinion with I'm extremely sorry to say, but Himanshu has been witnessing it that at the academic institution, there has been definitely the differences of opinion. But why does it not happen that if I can teach the finance, why I cannot earn money by applying the finance, especially the financial instruments? So this had been haunting to me. If I am a PhD in financial derivative, if I can write a research paper into the financial derivative, if I can just teach a strategy to the students in the classroom, why the same strategy cannot be implemented into the real battlefield? So again, all these motivations came from the students, and some were definitely here, there, somewhere from the academic world itself. So academic world has also played a very vital and instrumental role in just igniting the fire of entrepreneurship in me. So thanks to all the teachers again. So let's get back to the real battlefield. The instrument, financial derivative as an instrument itself, there are many myths. Like the first myth, the most dangerous myth that has been spreaded in the theoretical world, that financial derivatives is a very dangerous weapon. But my dear students, especially, I would like to tell to the students, if they have, I think many students have joined, financial derivative is not as dangerous as you think. It has been portrayed that it's a kind of landmine. So the moment you keep your feet into this landmine, there would be blast and you would just burn everything. It is not like that. Financial derivative gives you a lot of things if you know how to play with it. The only thing is that you need to understand its dynamic. It will give you a lot of freedom to live your life. It will give you sufficient money from which just you can do whatever you want to do. And it makes you powerful day by day, because if you are getting a lots of time to do lots of things and sufficient money, definitely you can understand the power of money and time. If you put both of them, just you can do anything. So number one, just remove from your mind that financial derivative, someone said that it's a weapon of mass destruction, so I should take it on a face value. I should not take it at all, because I have been witnessing it for last 17 years. It is not the weapon of the mass destruction. Rather, I say it's a weapon of the wealth creation, right? But definitely you need to understand the context, that in which context, who is telling what. So context is very important of everything. The second, the biggest myth that has been spreaded in the world of economics that I defy, that it's a very common practice, is that before 2008 or 9, I also just did the same thing and just I spread this number and wrote on the board that higher the risk, higher the return, lower the risk, lower the return. So my dear friends, I do not believe in this philosophy, practically and theoretically both. I do not need to take high risk to get the high return. Even if you look at it mathematically, if you keep the return into the numerator side and your risk at the denominator side, and I do not do any just adjustment with the numerator, and just if I keep reducing the denominator, automatically my return goes up. So we believe we have a new philosophy in the practice world, that low risk, high return. And if to get the high return, I need to definitely take the high risk. I am not going to take this risk. I'm not going to be the part of that game. So just we need to understand the dynamics. Is it really possible to increase your per unit return by increasing per 1 unit of risk? And again, another question, is it possible to increase my return keeping my risk constant as a numerator? So these are the two important questions that we need to think. The next thing, that there is a myth about the financial derivative, and just I think the professor, they are professor of finance. Many professors now they have started agreeing with this, right? Because all the literature I have read, and all the whether it is of the top class renowned academician and whatever it is, right? So it is written that there is an unlimited profit and unlimited risk if you deal into the future. And the payoff structure, the way payoff structure has been shown into the book, it is not like that. There is nothing like unlimited risk and unlimited return. There are so many checks and balances in between. You need to understand there are so many slips between lips and the cups. So I need to understand those slips. So don't get afraid of that. If I play into the financial derivative, just I will have there is a possibility of unlimited profit, or there is a risk of unlimited risk. everything is done within a check and within a balance. It is not like that. Number 3 myth which I want to tell you, that why there are many people who are my institutional client. There are certain people who are HNI. They were under the influence of a bias sort of thing, and they always believe that if I could not forecast the market movement, if I could not predict the direction of the market movement, I will not be in a position to earn money. That is also not true. So the real participant, the real traders, they can earn money, and we have been doing it. We have the mathematical model that by keeping all the position neutral, we earn money without making any kind of forecasting in the market, without making any kind of prediction in the market. I don't know what is going to happen tomorrow in the next 17-18 hours, right? So, and I do not have even the access that is happening across the world. So why should I predict? I don't know tomorrow whether which stock will go up and which stock will come down. I don't know whether what decision is being taken by the Fed. I don't know what is going to happen in this budget. Why should I bother for all these things? The only thing which I need to bother about my model, is my model perfect enough to control my risk, unpredictable risk that will come within 2, 3, 4, 5, 6 standard deviation. So I think as a student of finance, whoever is part of this conference, they must be understanding the importance of the standard deviation. So you need to build a model, you need to backtest the model, and then you need to execute the model. Now it depends upon the availability of the resources, whether I can get my model executed manually or through the automated. So to make it very simple, I want to tell it that trading and investment is not the game of price forecasting. So this is one of the biggest myth that has been spreaded, that if I am in a position, if I learn the technical analysis and I look at the few chart like candlestick, moving averages and all, I will earn money. No, never. One can never earn money by doing the technical analysis and all. The only thing is that trading, we have a fundamental equation that trading and investment success is a function of your risk management, position management, money management, execution management, and the fifth, that is the price movement management. And out of these 5 elements, the first, if somebody asks me to rate at the scale, I will rate number 1 to the risk management. If I am in a position to manage my risk, I will definitely earn money, right? If I am in a position to manage my position, I will definitely earn money, keeping in view the market neutral. If I can just put my money efficiently, if I know how to optimize the positioning of my money, the allocation of my money without predicting the market price movement, I can earn money by using the tool of financial derivative. And the next is the execution management. Execution management is a subject of a study in itself. We need to understand the market microstructure. Even I am very sorry to say, and just I speak it on bluntly, that I have not found any good research paper except 1 or 2 in India, especially in the top class journal of finance. That paper has been written on the market microstructure. And nowadays, you won't believe the people from the high frequency world, they are just taking and they are just capitalizing the lacuna that is into the market microstructure, and they are minting money like anything, even we cannot think of. So all these things we need to know. And the next important thing, that is, I give it to the next topic that I said, that is the price movement management. I give the least importance to it. So if you are free from the prediction, like what is going to happen, 200 point Nifty up and 200 point Nifty down, my stock is going to up by 50 rupees or 100 rupees, or it is coming down. If you could create this kind of position, into your portfolio, you are going to make the money. So always try to think being market neutral. And the day we start thinking being the market neutral, that we will start making money. And the most important thing I want to tell to my spirited students, there is a beautiful career into this field, right? Because when we talk about the financial market, what is just people think about 2-3 career options. They think either I will go and join a broking house, I will start selling insurance product or a demat account or whatever it is. It is not like that. Perhaps many of you might be knowing that nowadays engineers have become the most sought after people into the finance industry. Why engineers have become the most sought after people into the finance industry? Because they have the computational ability, they have the logical thinking ability, they have the ability to develop the code so that they could just get their strategy activated. For all this reason, nowadays finance guy, if I'm expert in finance, I would not be welcome in this industry. But if I have the ability to just to do the data crunching, if I have the ability to just make some model by using statistics or basics mathematics, and if I could just use some probabilistic expression, if I could just use the probability, I would be welcome into this financial world. And there is a beautiful career as an entrepreneur, as an employee, or if as an investor. So whatever, and you can start the beautiful thing of this business is that it doesn't give any barrier to anyone to get into it. But definitely the things are not so easy. The things are not so rosy. So instead, looking at the rosy picture, you will have to look at the just hunting picture. I'm using the word hunting picture. So we need to have concern. We need to develop the real interest, that the real passionate interest that I will have to spend my time to develop some mathematical model. You will have to spend some time to find out some technology. You will have to spend some time to find out just to backtest your data. And this is the only way through which you can make money. And if you could do all these things, it takes some time. Nothing happens overnightly. It may take 6 months. It may take 1 year. Practically right now, it takes at least 3 to 4 months for us, right from the ideation of the trading strategy to bringing it to the execution level. Why? Because we do not work into the market. Generally, what there is a common myth among the normal people, that market function between 9:15 to 3:30. Especially I'm talking about Indian market, right? Market function between 9:15 to 3:30. But this is not the practical. Actually, our real work starts beyond the market. Between 9:15 to 3:30, it's just the execution work. We just look after the execution, whether the execution is taking properly or not. Otherwise, what exactly it has to be done, it is decided before. So we need to have a pre-planning. So I think that I have given a brief introduction about and just to make it more interactive, let the question come from the part of participants. Hello?
Yes, sir.
Yeah, Dr. Kumar, sure. I think I have given a brief introduction. So right, let it open for the queries, right?
Right, sir.
Because a lot of things I can speak, but I wish to answer the queries that is coming by the audience.
Sure, sir. So participants, if you have any question, you can ask for related with derivative market or derivative trading. Roshan, Asan, Sakshi, Lavkosh, if you have any question, you may ask for.
Any doubt related to their career into the markets, about any other instrument like equity, commodities, currencies, because I deal in commodities, I deal in currencies, I deal in all, right?
Yes, even if you are thinking about those who are in second year, they are thinking about like, I have got job in this particular segment, like sir had also spoken about in the broking company or anywhere. So what you could do there if you have aspiration towards finance, you don't want to be in marketing, you may ask these kind of questions also. So we have one question like
Is
from
quite
Sweet
Bitcoin,
Kumari.
yeah.
Yes, sir.
I could read this. Is Bitcoin a good investment for us? Okay. Now this is again, like financial derivatives, this has all, Bitcoin has also become a buzzword. I'm getting a lot of questions from my relatives, my friends, and many of my clients also. Because nowadays Bitcoin has become the darling of everyone. It has been hyped by the media like anything. So my dear student, first you need to understand that what is Bitcoin all about. So you need to understand. So as a technology, the technology at which the Bitcoin works like blockchain, that is a wonderful technology. I appreciate it. As a technology, blockchain is a wonderful tool to be used, and we are also using. So, but your question whether it is Bitcoin is, should I get into a Bitcoin investment or not? By now, the regulator of our country, even the regulator of many other country also, they have been not in a position to classify it, that which asset class does this belong to. Should I participate it as a currency? Should I just classify it as a commodity or any equity class as a, or what? So that's the, again, second thing, especially in India, there is no regulator of any digital currency. So this has not been accepted by our law of the land. So I suggest that anything which has not been accepted by the law of the land, we should not get into it, because there is no regulator. So again, it's a very good question whoever has asked. Look, what we are doing, we are trying to capitalize on we are trying to capitalize in a very uncharted zone, and we are trying to work on guess. So there is a hard mentality that Bitcoin, because the value of Bitcoin every day it is shown that it has gone from this level to this level and to that level, but we do not understand what the Bitcoin is. So why should I get into the thing which I do not understand? There is no regulator. If somebody takes your money and he flies, right? Already we have experienced so many fly-by-night companies in the name of the Ponzi scheme, in the name of the doubling your expense. So it is also like that. So anything, any asset class, unless and until there is a specified regulation for it, there is a regulator who is ready to regulate it, one should not get into it. But definitely if somebody is planning to get into the technology of the Bitcoin, definitely it's going to be a wonderful career option for you. I think I have answered.
Right, sir. Sir, we have another question from Ashish Kumar.
Yeah.
Can we have more details about market microstructure?
Yeah, it's a very good question. I'd love. So look, generally there is a common perception. Even when I was doing my MCom and PhD, so even the professors, they could not talk. So when people said that I want to get into the stock market, so they said, if you want to get into stock market, where are you looking for your job? So one guy, we said that we want to join the SEBI, right? So we could not understand that SEBI is a regulator. If somebody go and join SEBI, say you are not going to learn anything about the market. If somebody goes and join to the National Stock Exchange or the BSE, you are not going to learn anything about the market, right? So we need to understand. If you assume that somebody is working at the National Stock Exchange or the Bombay Stock Exchange, he's expert of the market, he's not at all. Because that's a totally different domain. They are just a kind of service provider. They are not doing anything with the mechanism of the market. So market microstructure means we need to understand the order flow, that limit order book. There is a technical term we call that is a limit order book, right? So how does this order flow work? How does the order is placed? What are the technology through which we are placing order from different geographic location of our country or our world, and it is being routed to the stock exchanges. And again, the order is coming back to us. So what is the mechanism? So there are different type of mechanism over which it works. Like the first mechanism, that is on the price on time mechanism. Second mechanism, we call it is a pro rata mechanism. The third mechanism, we call it as a market making mechanism. And every mechanism has its own advantages and disadvantages. And every mechanism provides the opportunity. So in a one order limit book is the one classic example. The study of the order limit book is one classic example of the market microstructure. Yeah. Any other question?
Do you have any other question, students? Okay, sir. Meanwhile, they are thinking about question. Like I want to ask. We have discussed about high frequency trading and algorithmic trading.
Yeah.
So if any of the students wish to have a career in this field, what are the aspects they need to prepare for?
Look, one thing I wish to make it very clear, to be in the market, one does not need to be the most intelligent guy, right? The most intelligent guy have never survived into the market. And one does not need to be the super rich also simultaneously. What is needed that if I want to make my career into the high frequency trading, I need to understand first that a term called quant finance. So I need to understand the quant finance. So what is the example of quant finance? Just if you permit me, I would like to ask a very few one line question to all the participants, if you permit, right?
Sure, sir.
So suppose it's not a kind of academic. So suppose I ask a question that suppose 1 dozen of banana cost me rupees 50. 1 dozen of banana cost me rupees 50. And I want to buy 10 dozen of banana. How much amount will I have to pay? So what should be the answer? So let this answer get from the participant. If 1 dozen of banana is costing me 50 rupees, how much 10 dozen of banana will cost? And let me see what answer comes.
All of you can
500, sir. 500.
500. I was expecting the same answer, right? So look, my dear students, this is the difference between theory and practice. I am telling you. Look, the term I use, market microstructure, there this concept gets applied. This quant finance, it's a pure typical quant finance question. And practically, if I go to buy the 10 dozen of banana, I will not go and I will pay 500 rupees, right? I will go, there is a term called, you must have read it into the negotiation marketing, that is a term negotiation. So I will go for the negotiation. We also negotiate into the market, or that depends upon the volume. So either I will go and I will check, I will just negotiate with the seller that I want to buy 10 dozen of banana. So why should I buy it at the 50 rupees all the banana per dozen? So I will negotiate. So I may get 1 dozen of banana at 48 rupees or 57 or 45 rupees, right? Bluntly. So there is nothing straightforward. So in quant finance, there is a mathematics and there is a mathematics into the quant finance. There are two areas, right? So in quant finance, what I want to tell that there is 2 plus 2 is not always equal to 4. This we need to understand. In quant finance, 2 plus 2, there might be 5 or it might be 3, practically. So we need to discuss. So when just the moment I talked about the order book, limit order book, it's a part of the market microstructure, right? So what does it say? That the moment we place high volume of the order into the market, what happens? If I just go and if the banana seller comes to know that this guy has to buy 100 dozen of banana and the supply of the banana is just $50-$60, what they will do? They will just immediately increase the price. And but if I know that I have to buy 50 dozen of banana, but just only there are 500 dozen of banana is available in the market, I will try to negotiate it as much low price as possible, right? And I will take the benefit of that. So this is what exactly the quant finance and high frequency trader, what do? They take the benefit of the market microstructure in the limit order book, and their order gets executed. You cannot think of in a very, very microsecond, or now it has come down to the nanosecond. So actually on the screen, now everybody is having a demat account and they have the access of the, so the rate which you are actually looking at the screen is not the actual rate. The rate is totally different. It is not possible for us to look the actual rate with our naked eyes. So if you want to make your career into the high frequency trading, I'm just suggesting you the name of one guy. Must look the Paul Wilmot. You must have heard Paul Wilmot, right? So try to just to get a kind of feel. Just Paul Wilmot has just written a beautiful book on the quant finance, right? And you can look one guy that you must have heard about it, Jim Simon. I'm just naming Jim Simon. So just start looking at few videos of the Jim Simon, right? They are not the finance guy. They are pure mathematician. They are pure physicists, right? And they would just motivate you like anything to understand the quant finance, that how the mathematics, small mathematics works well. The tweaking of little of the algebraic expression which we studied into our 8th, 9th or 10th class, that pays a lot of fruits, beautiful fruits. So you need to be little mathematical, and simultaneously, to make it a very crisp, you need to be little mathematical, and you need to have at least the at least you should have the knowledge of at least one statistical language like Python. So Python is the most sought after language nowadays. R is also used up to great extent, but now we prefer Python. And especially in high frequency, if you have the knowledge of C++, that would be an added advantage.
Thank you, sir. Any other question from any participants? Any question? Like you can take advantage of more than 17-18 years of experience of Anup sir. You can ask question from anywhere. Okay. So I guess you don't have any query.
Okay.
On this. So thank you very much, sir.
So one thing definitely I wish to add, right? That students, especially those who have opted finance as their specialization, they are at a advantageous position being associated with the IBS. I want to tell them how, because in 2002, when I had started my PhD on the financial derivative, it was a totally unknown chartered zone for us. But the journal that I read of the IBS that time, it was being published by the IBS Hyderabad. It was a wonderful public journal. So I suggest you also that just suggest your students to start reading that journal, those journals that is being published from the IBS Hyderabad especially, right? They have a lot of value. And if they start learning especially few journals they publish on the quantifying the financial derivatives, right? So I am keeping one or two copies, right? So in fact, those journals help me out in making the foundation of the financial derivative, right? So I don't know whether you students of the same institute, whether they like it or they do not like it, or whether they are taking this advantage or not, because generally it happens that they think that because this has been published from my institute, so it does not have much value. But I want to tell them they must start reading that Journal of Finance of the IBS Hyderabad. That's a wonderful journal.
Right, sir. Only challenge which nowadays we are facing, like students are not here, they are on online mode, and in library we do have copies of all these journals, but they don't have access to that. That is a challenge faced by at least the passing out batch.
Okay.
They joined online and now they are leaving online only.
Once, in fact, I had subscribed it personally.
Right, right.
because it was that time, it was a totally uncharted zone in 2002. Nobody was just knowing anything about that derivatives. So somehow I just came to know about my guide that the IBS Hyderabad must be publishing journals, because that time they happened to be the leading institution into the world of finance, right?
Right, sir.
And definitely I appreciate the quality of journal they publish.
Right.
Especially in finance, which I have read. I don't know, I can't say about any other stream, but appreciate.
Definitely they have very good publication. So we have another question from Abhishek Kumar.
Yeah.
He want to know about option dynamics.
Okay. How can we have gains, sir? As you said, we assume market neutral. Yeah, it's a very good question. So I don't know, students are from first year, or they have the basic knowledge of options, or I don't know. But I assume they have. And at least to who have asked this question, at least he is having the basic knowledge. So in option, the beautiful thing is that we have a premium. So premium has two components. One is options value, another is the time value. So options value, it's a very theoretical information I want to give. So option premium has two components. One is intrinsic value and another is the time value. So to play with the market neutral, we play with the time value. We do not do anything, any adjustment with the intrinsic value, because the moment we start playing with the intrinsic value, it means we are also being the directional. So in option, there are advanced topics like Greeks, like delta, theta, vega, gamma, and rho. So what, as a pure option trader, we keep in a very technical term, we keep our delta neutral. Delta is just that gives us the directional risk. It's a tool we use to measure our directional risk into our option portfolio, and we keep theta into our favor. So theta, that is the time value, is keeps our position. That helps us a lot to play us on keeping the market neutral. So we do not predict the market. I don't know. I do not have the tool, and I do not, to be very honest, and I do not have even the capability that I can predict that tomorrow Nifty is going to 20,000 and it is coming to 12,000. But definitely I know, because options is there to protect me the downside and upside both, right? So I play especially on theta value. And especially there are a few strategy like butterfly. We call it as a butterfly, one of the wonderful strategy. Butterfly, conversion, reversion, box, and the jelly roll. These are the four strategy we work on in these four strategy a lot, right? And that's help us. Even tomorrow, we have lots of open position today, but even tomorrow the market goes down by 5,000 points or goes up by 5,000 points, it doesn't bother to us a lot. Definitely there would be some impact on us, I'm not telling you, but at least we know that how much it is going to impact me maximum, right? So if I leave my position open, right, what is the maximum loss if market goes haywire? In any case, what is going to be the maximum loss to me? So what we do, just we keep quantified our maximum loss position. Even if I go extremely wrong. So before taking our position, we ask three questions from ourselves. Question number one, we ask that, how much money I'm going to make if I am totally right? The question number two, which we ask, how much money I'm going to make if I'm going to be slightly wrong? And how much money I'm going to lose if I go extremely wrong? So before taking any position, the answer of these three questions are before our table. And in any trading and investment business, not only into the option, finance, and derivative, if you are in a position to answer these three questions, I think there is no question of losing money. Definitely, if to answer these three questions, it's not so simple. You will have to use so many tools, so many mathematics are there that we need to understand. So many calculations are there that we need to understand, right? Any other questions?
We have a question like some strategies which work well in the market using futures and options.
Yeah.
If you can discuss few of these.
So as I said that butterfly is one of the wonderful strategy. It is evergreen strategy. It has it it is an evergreen strategy, right? And look, generally what happens when for a trader, look, especially you need to decide. So, but for people like us, we are just like a pandit. We perform the role of pandit in the market, right? If somebody dies in somebody's home, even then we are. If there is a birth in somebody's home, even then we are, right? That's the beauty of this option trading, right? So if the market falls, that's a much better opportunity for us in terms of the best optimum utilization of the money and the fund that we have, right? And if the market goes up, we earn, right? So we should be free from the going up of the market and coming, because we are not the investor. Again, so first we need to understand what is the thin line, what is the differentiating factor between the investment, trading, and speculation and gambling. These are the four things: gambling, speculation, trading, and investment. So can you quantify and can you just slice? Are you in a position to slice to create the thin line? Right. So you need to understand which category you are in. I am not an investor. Even I do not have to, very honest, I do not keep even a single rupee share into my Demat account. I am a pure trader. Right. I am a pure trader. But there are people who are pure investors, so they understand their own dynamics. Mm-hmm. Right. But being into the zone of guessism and speculation, I totally avoid. And I suggest that never be into the जोन ऑफ गेसिज्म कि यार कल मेरे को लग रहा है आज फेड का मीटिंग है, कल बजट आने वाला है, ऐसा हो जाएगा तो वैसा हो जाएगा. इट शुड नॉट बी लाइक दैट, राइट? सो गेस एंड स्पेकुलेशन ऑलवेज इट इज totally something related with your luck. But trading and investment, where you work with the probability. So what we do, the summum bonum of all the discussion and everything is that what we do, that we, by using the probability, we just reduce the chance of being wrong to the minimum possible level, right? So in a statistical term, you can call, in academic terms, that the confidence interval of our hypothesis testing, right? We just always keep it below 0.5, right? So we do a lot of back test on the data, right? We hypothesize it, then we go for the back testing, right? We do not put money because it's not a 1 lot or 2 lot or 1 lakh 2 lot, right? At our strategy, we just put a very huge amount of money, right? So even the 50-point movement in any direction, it can make us or mar us, right? 1% makes a lot of difference for us, right? So you need to understand it's a combination of statistics, mathematics, domain knowledge, and technology.
Right, sir. So now we have 2 more questions. One is about, if you can explain a bit about delta, gamma, and the option Greeks.
Yeah. So practically it won't be possible here to give you the detail, especially those who are not having the knowledge, but in a very plain, simple language, I can tell you. Delta is a statistical tools, or it's a ratio, pure ratio. In mathematical terms, it's a pure ratio that gives me a kind of idea that how much my option position, again, I am under quote, it is the option position, how much my option position is on a directional risk. Gamma is a curvature of delta itself. So practically gamma is the second order of derivative. It's a delta of, you can call delta, right? So gamma let me know ahead that how my delta is going to move, right? So if before moving the delta, I could recognize that where is my gamma risk, right? So gamma is a curvature of delta. And the third, theta tells me that how much time value I am giving or how much time value I am supposed to receive. So with every day passage of the time, how much my option portfolio is going to be impacted with every passage of the time. And the fourth, that is the volatility, the most important factor. So volatility, it impacts to all. Volatility impacts to our theta, it impacts to our delta also sometimes, and it impacts to definitely if the delta and theta are getting impacted by gamma and delta, automatically it's going to be impacted, right? So, but volatility is a darling to us as an option trader. If the moment volatility comes down below 10, it becomes very difficult for us to get a return of even 1%, right? But right now there is a very high volatility. It is just moving every day between 20 and 22, right? So right now, So right now, option traders are very happy because the volatility in the market is very high, right? Because we are not happy because the market is going up and coming down. We are happy because the option premium is very high, right? And the high option premium means a high time value, and that's the saving grace for a option trader. And in a very short, I'm telling you, option gives us a lot of place to commit the error, right? To conceal our error. In fact, ऑप्शन हमारे लिए एक तरह से समझिए माँ की काम, जैसे हमारे माँ हमारी बहुत सारी गलतियों को छुपा लेती है ना, वैसे ऑप्शन में भी हम बहुत सारे गलत डिसीजन लेते हैं ना, तो हमें हमारी गलतियों को छुपा करके फिर भी हमें पैसा दे देती है. मजे की बात यह है ऑप्शन के साथ. दिस इज द ब्यूटी ऑफ द ऑप्शन.
Okay, another question is related with that. How much return as a trader I can expect from dealing in F&O segment?
It's a very relevant question, and it's people are into few say that I can earn 20% return, I can earn 50% return, 100% return, but it is not right. If you are getting a return that is more than 18% annually, right, you should be more than happy. But that return is risk-free, right? Because there are two things. So one day I was just, I do not want to tell the name, but definitely they are professor of a few renowned institutions. In fact, they were taking training on this financial derivative itself. So they were under perception that working in derivative, we can get a return of 50, 25%, 30%, it is like that. But again, I said that if there is a term called scaling in the business. So if you are really into the business of trading and investment, 18% and above return, keeping your risk almost zero is very good return. It is considered as a very good return, right? But again, I am increasing. You cannot expect the return. You can just reap the return from the market. So it is like that, which is the standard rate of return. So suppose suppose I throw the dice, right? There are 6 sides of the dice. If I ask that, how many times I will get the 6? So what is the standard rate of return from that dice? It is just like throwing the dice. Every time we throw the dice, right? So, and it works on the concept of probability. So and as an academician, you must be knowing the probability works when you are doing the same thing again and again for n number of times, right? So if we keep on doing the same thing again and again by betting on at the less cost than the average rate of return, right? So if we are betting n number of times, many times we also go wrong, but at the end of the day, what happens? We just close our position into profit. Why it happens? It doesn't mean that we do not have loss. We have the loss, but the number of the times we get the profit is much higher than the loss, right? So expected realistic return, if you are getting more than 18% annually, risk-free on a large capital, right? I'm not telling that if somebody has worked in 1 day or 2 days and 1 lakh, 2 lakhs or 1 लाख लगा करके अगर किसी दिन उसने 1,10,000 कमा लिया, वो रिटर्न नहीं करते, उसको ट्रेडिंग नहीं करते. टू वेरी ऑनेस्ट, ट्रेडिंग ये होता है क्या आप उस ट्रेडिंग से अपने घर के रोजी रोटी को चला सकते हैं कंसिस्टेंटली 5 साल, 10 साल, 15 साल. Can you just scale it up? This is what the trading. So first we need to understand what is the meaning of trading. This is also not different than any other business.
Right, sir.
Yeah.
Any other questions from participants? What is your strategy in options and how you make use of the option Greeks?
We do not use option Greeks, number one, to do any market forecasting. We use option Greeks for the risk management, right? Number two, we play into so many strategies, right? But if you look at the risk-free, price risk-free profit, we generally play into the butterfly, jelly roll, conversion, reversion, and butterfly, jelly roll, conversion, reversion, and box. These are the 4 strategies which out of 4, the 3 that is the box, butterfly, and conversion, reversion, these are the almost price risk-free strategy. And the last, the jelly roll, there is a risk, but the risk is very controlled. So when we have to deploy the large amount of capital, right, like 30, 40, 50, 60 crore, we play into this 4, right, because we are happy with the 1.25% return every month, right? 1.25 to 1.5% return, we are happy. But if we definitely want to take, we just deploy a lot of other strategy, right?
Depending upon market conditions.
No, not again. But I cannot say, we do not do anything on the market condition.
Okay.
Market is always neutral for us. I don't know what is going. We are neither bull nor bear. It is like that.
Right. Any other questions? How can we start these strategies and how much we required as a capital or as a student until we are not earning? There is any way to deal in that
it's a good
market?
and very practical question. So first, my dear students, you will have to roll up your sleeves to give a lot of time. Get up early in the morning, start reading lots of books, lots of literature. First, develop the foundation, right? So, number 1. Number 2, lots of organizations, they are ready to hire you, right? Even we also hire so many interns and all, right? So, money is not a big deal, right? People are ready with the heavy bags of the money to give you. The only thing you need to have a clarity about your idea, your thoughts, and your concept. Earlier also I used to think like that, right? A student is not wrong. Generally there's a misconception about money because I cannot do the business because I do not have money. But to be very honest, I'm telling you, nowadays investors are, if you have the strategy back tested and all, and you say this is my strategy and this is my record, right? They are ready to give you the money like anything. They are crazy to give you the money, yeah. Even we are not in a position to accept as much money we are getting, to be very honest. Because we also have a limitation, no? So money doesn't matter a lot. First matter your own strength. But develop your own strength, like you learn mathematics, you learn the Python, you learn analytics, and definitely the financial derivatives. Yeah.
Right. So knowledge is important, not the
definitely knowledge plays very, very important role.
Okay, I guess Abhishek has answered for Ashish Kumar.
Yeah.
Like you can use Sensible, must be a paper trading or a simulation kind of platform. Right. Any other questions? I guess they have exhausted their list.
Okay, thanks.
So, thank you, sir. Now, I would like to invite Mohit Tyagi. Sir.
Yeah, sir.
Now
Thank you so much, sir. Thank you so much, Dr. Anup, as well, for conducting and giving good insights on this topic of financial derivatives. So first of all, before starting with what I need to convey, I would really like to thank whole management of ICFAI University on behalf of GrabGuidance that you have given us the opportunity, and especially Dr. Saurabh for his support in conducting this session. Right, so I would really like to thank you, and we are very obliged to take the session on your platform. And most importantly, I would like to thank each and every participant who have been listening to Dr. Anup Raj very patiently, and you have you have been very supporting audience in this, right? You have asked really good questions, which we are really planning to answer, right? So thank you everyone for this amazing session. And moving further, so guys, being a part of the session, you might have been hearing a word, GrabGuidance, a lot, right from starting, right? And as you have seen in your creative also, that Dr. Anup Raj is from GrabGuidance, right? So you might be thinking very much keen to know that what GrabGuidance basically is, right? So I'll just give a brief on that also. Being a part of GrabGuidance team, this GrabGuidance community, we generally keep on conducting these kinds of sessions, especially for the young minds like you, right? So GrabGuidance is a platform, or you can say it's a online edtech company, which generally helps our student community to resolve the confusion in their mind, right? Whatever the confusion they have, we work on them, and we try to impart the best knowledge in whatever we can to all the student community, right? So that's the motive behind GrabGuidance. To give a detailed description about what GrabGuidance basically is and what we all do in this, I'll just share my screen with you guys. So just give me a minute. Yeah. Just give me a minute. Can you see my screen?
No, sir, you have not shared yet.
Just a minute.
Just click on a button, green color button.
That too, I'm aware.
Now it's
Is it visible now?
Yes.
Yeah, great. Fine. So here you can see this is the GrabGuidance homepage. It's a portal which we have designed, very amazing and very beautiful portal we have designed, right? So it's a very user-friendly model which we have came up with. And here you can see it's a marketplace. I'll say it's a marketplace of experts for students and professionals, right? Where they can take one-on-one live sessions on academic as well as career guidance. Plus, there are a lot of more add-ons to this portal we have. So when we talk about this portal, we are majorly focused to resolve whatever doubts, whatever confusion you have in your mind, right? So being a student, we have always seen that a lot of students have some doubts, right, at different stages of life, right? When they enter into 10th, then they're confused at which stream to go for in 11th and 12th. When they reach out to 12th, they are very much confused that what to do after 12th, right? And after that, once they are done with the graduation and post-graduation, then the confusion arises that which field to go for to make their career, right? So their GrabGuidance come and they resolve that confusion, right? So with us, we keep on conducting a lot of sessions, counseling sessions, or I'll say counseling and job advice sessions we conduct, right? So these all things we keep on conducting and try to clear the confusion in mind of each and every students or users of ours, right? So you can see it's a personalized guidance. We provide personalized guidance online. So on this platform, we have around 160 plus certified and qualified experts who are one of the best experts in their particular areas, right? Then we also provide 20-minute session, which you can say a very short session. We try to resolve a simple query as well. So being a user or being a student, you have a one doubt also. Rather it for your career support or it is into any academic subjects, right? So you can come to this platform with a single query as well, and we can answer that, right? That too starting from very low price, right? And here you can see we have certain live courses. We do work with schools and colleges. We have some live packages, which I'll give a brief about it. So same way with schools and colleges, we keep on conducting these kinds of sessions, very informative session, so that you, as being a young mind or being a student, you get a lot of insights on what things you have to do in future, right? So that we keep on doing. So how this platform works? Here, whenever you feel like you have some confusion in your mind, you're most welcome to visit this platform, right? Here you can click on explore option, right? So suppose I'll say I'm an MBA student, right? And after completing my MBA, I want just give an interview in some big shot company, right? So I want to prepare on interview preparation. So I click on interview preparation. And I'll see these are the experts. We have around 51 experts who can help you in preparing for the interview, right? So here you can see all the profiles of our experts, right? And you can see whichever expert suits you. You can directly go to their profile, click on the profile, right? You can see in detail about that. He has experience in marketing and management. He has 25 years of experience guy, right? Plus his time availability is mentioned here. Then after that, what is his experience? He's a founder and CEO of Lhasa Consulting, right? CMO of Infinity. So all the details, experience, and background of an expert will be showcased here, right? Plus his expertise, what are the expertise area of an expert, right? He can guide MBA and PhD students. These are the subjects he can cover. These are the career guidance things which he can support you guys, right? So according to these detail, you can search an expert of your choice and can book a session with them, right? Plus here you can see, you can book a session with them by selecting, if you want a 20-minute session, you can click on it. You want a 40-minute session, you can select 40 minutes. If you want a 60-minute session, you can select 60 minutes. You can click on choose and you can just book a session with them. Plus, if you find that this Amit Kumar Gopal is a perfect fit for you and you have taken one session with him and that session was very much amazing and you really want to talk to him in further future also, right? So you can book a multiple session with him so that he can help you out time to time to get all the things clear, right? So that's how we have built this portal. So you can easily go and search for the profile of an expert and can book a session. So when we talk about GrabGuidance, so GrabGuidance has three major USPs. So first one is we have experienced and qualified experts of your choice. So you can select an expert of your own choice by looking out at the profile which I have showcased you right now, right? Plus, it's a second thing is a comprehensive solution for online learning. So when we say comprehensive solution, which means we are a one-stop solution. We are an end-to-end provider, right? You can, starting from selecting an expert, booking a session with them, plus taking a session online on our portal itself, right? You don't have to switch to some other portal. You can take a session here only, right? That's how GrabGuidance works. Plus, quick guidance to small sessions, which I have showcased you. We have generally 20-minute session also. So you can book that 20-minute slot and can take a session, plus all the queries you can be answered, right? Your queries can be answered, right? So this is a basic about GrabGuidance platform. Plus add-ons, as I've told you that we provide counseling. So we have certain academic counseling packages. We provide career counseling also. Then job advice also. What to do after MBA, what to do after I guess post-graduation, right? Those things we generally provide. Plus, as you have heard from Dr. Anup Raj that about all the trading strategies, right? So we do provide such live courses also with us. We have some courses with us. So as we have Dr. Anup Raj with us, so he is also expert, one of the best experts we have on a GrabGuidance platform. So we have his course also. So these kind of live courses we also provide. We have n number of courses. You can see the whole list of it, right? Keep adding these courses. So here, course for trading strategies in future and option. So it's all the details I mentioned here, like it's a 24-hour course, which will cover in 2 months. There's the price of the course is here, right? What all things we covered in this particular course, advanced trading course description, right? Then course objectives, plus what are the major skills we covered, then course highlights and brief about the expert, plus in detail, all the things, all the session which we are going to take. So overall, as I say, we have 24 sessions. So all the things will be mentioned here, right? So same way, these kinds of courses are there on this GrabGuidance platform, which we keep on conducting, right? And apart from it, Dr. Anup Raj has also implemented certain different courses. So we have one course of algo trading strategies also with us on this platform. We'll be putting that course very shortly on this platform, right? That's a 52 hours plus 8 hours trading model strategies course. So total 60-hour course, which we are going with. So these are certain courses which we keep on conducting on this platform. So that's why we say that GrabGuidance is a very unique portal and it's a one-stop solution. Everything will be here on this portal with us, right? So being a student, you can always come, you can always visit this portal and you can always take session, right, with us. Whatever suits you. Just a minute. Yeah. So these are the major things which we will be covering on this, right? So it's a very user-friendly portal, and we really request each one of you to visit this portal once and can see the different strategies, different courses on trading strategies, plus other courses we also have, right? So yeah, that's all from my end. I'll be sharing Dr. Anup Raj's profile link also in a chat box, so you can whenever you feel like connecting with him, or you really want to talk to him on something, so you can visit to his profile and can discuss with him, right? So yeah, thank you so much from my end, and it's a very amazing audience, a great audience that we have. So yeah, thank you so much.
Thank you, Mohit. First and foremost, I would like to thank the management of ICFAI University for providing us a platform to interact or arrange these kind of session and interact with experts like Dr. Anup Raj. I would like to thank Dr. Anup Raj for his time and his knowledge sharing. I would like to thank the whole GrabGuidance team, including Dr. Himanshu Puri, Mr. Mohit, and all the participants for their active participation. Thank you all. Thank you.
Thanks a lot, sir.
Sir. Hope
Thank you so much.
things will be okay, and then we can meet one-on-one.
Always welcome. Most welcome, sir. Most welcome.
Thank you, sir.
Thank you.
Thank you, Mr. Mohit.
Thank you so much. Thank you so much, sir.
Bye all.
Bye.